Like I was. You guys can hear me better now?
I can hear you just fine.
Okay, perfect. So what we have here. So right here, everybody, we have. So right here we have. Of course, we have our trading view. So this is SPY, 1 year, 1 day time frame. Okay, the 1 year, 1 day time frame. On this 1 year, 1 day time frame, what do we have? We're right here at the top of this supply zone. At the top of the supply zone. Okay. Now we know that we've been inside this zone for how long? 1, 2, 3, 4 days. And we're slowly climbing out of this supply zone. Okay. We identified this what? On Monday, or yeah, I believe Monday we identified this. And as you can see, it's been slowly going up, creeping up, creeping up, creeping up. Okay. Like I previously said, right here, this is the place that we want to see, that 438 area. Okay, 438 is the area that we want to. 438 is the area that we want to break through. Okay, and that's the area that we want to break through before calls are in play. Okay, before calls are in play. 1 second, everybody. Okay, here we go. We're good
Mr. Jackson, can you hear me?
now. Yep, go ahead. You breaking up some though, but go ahead.
I had a supply zone on a 1 hour at 437.43. Is that accurate?
1 hour.
I'm still kind of learning like
So you got a 1 hour supply zone. Where is it at again?
at 437.43. I'm just trying to see if I'm looking at it right, if I'm doing it right.
Yep. So yeah, that whole zone, right? The whole zone is that supply zone. So this that supply zone is from the order that 436
Okay.
all the way to that 438. Okay, 436 to 438. So let's kind of let's go
Okay.
let's go through.
Okay.
Go ahead. Go
I
ahead.
was just making sure that I'm just doing it right and had the right understanding. Because like I said, this trading view, this I'm just getting used to using it. I'm just
Yeah.
trying to
Not.
get the right understanding. You feel me?
Yep. Nope. You good. You good. So let's do this. Matter of fact, before we even jump into what we were previously, everybody, what's the when we jump into as soon as we jump into look into a market, what's the first thing we're looking for? What time frame? What we're looking for?
1 day.
1 year, 1 day.
One day.
Yep. 1 year, 1 day, and what we're looking for.
Close to the price. As
Yep.
close to the price as you can get.
But for which one? Which
Oh,
indicator? Which thing?
the supply and demand.
Exactly.
Supply.
Yep. Exactly. Supply and demand. So when we come right here, we the first thing that pops up is what we know that we're at a what 1 year 1 day supply zone. Okay. So we're here right now at that 1 year 1 day supply zone. We call that 1 year 1 day supply zone Mary J. Blige. But what has been happening in this supply zone? We have been creeping up for the past 4 days to break outside of this zone. Okay, to break outside of this zone that we're currently in. All right, so we understand and we know that we have this supply zone right here. Okay, so we've already identified our supply zone. What do we go to next? Well, now since we identified our supply zone, what do we identify now?
The demand zone.
Exactly, the demand zone. So now let's drill down. Let's say okay, on the 1 year 1 day time frame, the closest demand zone is from a 408 down to a 404. So let's drill now. Let's start drilling down to see what's the next closest demand zone to the current price, right? So now we go down to the 4 hour time frame and say what does this demand zone say? Our next
When this pops up on my 4 hour, it shows. Well, I don't see it on. Can you zoom in closer? Because there is one that's right married up to the demand, to the supply, the demand to the supply.
Oh yeah, I see it.
4 hour.
Yep, I
And
see
I
it.
don't think it's right. Why is that a supply zone down there? I mean, why is that a demand zone at the bottom?
Yep. Now take a look. It's perfect. Take a look right here. So you see that we ran up, we consolidated, then we pushed back down, right? Look at this big green candlestick right here on the screen. What does this green candlestick do? Remember, we had consolidation for consolidation for 4 hours, consolidation for another 4, another 4, another 4, another 4, another 4, another 4. This big boy candlestick breaks through this level right here. It breaks through that consolidation and it breaks structure. In other words, it breaks structure. You guys will learn about that when we go over market structure. But it breaks this structure right here and it forms and it starts going up on a crazy push up. So remember, when we're looking at demand zones and supply zones, we're looking for consolidation. Then we're looking for that big boy candlestick that just takes out all the previous consolidation. Or we're looking for that big boy.
Why do they have the start of that demand zone is on a candle, on that last green candle with the long wick there? Why would that be the start of the demand zone?
Yep, so
candles to your left there.
Yep, right here, this big boy green one, right? It's different ways you can look at it. If you look right here at the bottom of this wick, this is where the big push actually started up here. Then we had a slight pullback and then it came up. But the play started down here, pushed all the way up here, came back down some and then pushed back up. Now, granted, to your point, you're probably saying, well, Chris, why don't we just use this candlestick right here as the demand zone, right? That could potentially,
I would have thought.
Yep, that could potentially be the demand zone as well.
I guess it doesn't make much of a difference. We're talking pennies, but yeah.
But at the same time, we're talking about a 50-cent change, right? For some people, that could be major. For some people, it could be small, right? But it all depends on what your preference is, okay? So for me, for example, if I was drawing it myself personally, I would come right here and take this candle right here, and I would have a demand zone right here. But for this particular indicator that we use, they took this whole body because the play started right here, pushed up, and the play was still in motion as long as this candlestick did not come beneath this candlestick. Make sense?
Yeah, they know better than I do, no doubt about it.
No, but I'm with you though. Good observation. So what do we have here now, everybody? We have a demand zone that's right here and a supply zone that's right here. They're right on top of each other. They're right here. What does this mean is the question. It means right now we're in a whole bunch of mess. That's what I would call it, right? The play to the downside, where the play to the upside is, once again, we have to break above this 438 level. That's where the supply zone is. For me, I'm not playing any plays until we break above this supply zone. The play to the downside is when we come down here. We want to see a break of that 433.5. Okay? A break of the 433.5 tells us, hey, we may continue to go down some more. Okay? So, boom, a break of this 433.5 tells us the play can continue to go down because this is a demand zone, and we will be breaking the demand zone. A play to that 433.5 and consolidation start to push back up. What does that tell us? That means the buyers are buying in and we're pushing back up. Okay? When it overlaps like this, the safe bet is just to sit there and watch and let it do what it's going to do. It's a $4 range, basically from 433.5 to 438, $4.50 range. High probability trades tells us this, okay? A high probability trade tells us that, listen, I'm not trading until it breaks above this 438, or that's for calls, and I'm not playing puts unless it breaks beneath this 433.5. Now that's high probability trades. Of course, you can scalp here and there. Okay, of course you can scalp here and there, but high probability, I'm not touching it. That's on a 4-hour time frame. Okay. All right, so let's go to QQQ. Let's break down QQQ right quick. Once again, I know this is going to sound repetitive, everybody. What's the first thing we look for, everybody? Anytime we come to any stock, what's the first thing we're looking for?
Supply and demand.
Supply and demand. What's the first time frame we start on?
1 year, 1 day.
1 year, 1 day.
One day.
Exactly. On the 1 year, 1 day, we're looking to start off looking, see what we see on the screen when it pulls up. Let's see. Right? On the 1 year, 1 day, does anything, oh, it hasn't popped up. There we go. The 1 year, 1 day, where are we currently right now, everybody?
We're right at that A point to the supply zone.
Exactly. We in that supply zone. Okay. So right now we know we're currently inside of a 1 year, 1 day supply zone. Okay. What's next? Do we see a demand zone anywhere close? We have a demand zone down at 315.
Nowhere close.
Nowhere close. So if we don't see a demand zone anywhere close, what is our next thing for us to do?
Keep drilling down.
Drill down. Exactly. Boom. We drill down. What time frame do we go to?
4 hours.
1 hour.
4 hour. Exactly. Good stuff, everybody. Good stuff.
Okay, 4 hours. 1 year, 1 day, 4 hour, 1 hour. My bad.
No, you good. You good. Now we see a demand zone on the 4 hour at 347 to 341 on the 4 hour time frame. Okay. The current price is at 373, 374. So what should we do, everybody?
Drill down.
Drill.
Some more.
Exactly. Drill down some more. What's the next time frame do we go to? There you go. The 1 hour.
1
Good,
hour.
good stuff. Good stuff. Now we come down to the 1 hour and let's see what the 1 hour says. There we go. What's the closest demands on the 1 hour? Right here, we have a 368.5 to a 368. So now we understand our levels for our zones for QQQ. We have our 1 year, 1 day zone, and then we see our closest demand zone is on the 1 hour time frame. Okay?
Chris, question.
Yes, ma'am.
That 1 hour, that 1 year, 1 day, you said you did not have a demand zone. I don't understand that one.
So I probably used the wrong verbiage. We do have a demand zone, but look where the demand zone is at. It's all the way down here at 315.
Okay,
You see it down here at 315?
okay.
Yep.
And that's because, is that because that's where oh, I see it. Okay, I see it. I got you.
You see it right here?
Yeah, I got it.
But the question, let me ask you this question though. Do you understand why though? Because it's one thing for you to see it, but I want you to understand why.
Because the buyers are, does it have to do with the buyers buying in?
It does. Yep, it does. It really does. It does. So let me break it down to you. If we look right here on our screen, right, when we have our demand zones, we want to see a big boy candlestick or 3 to 4 to 5 to 6 candlesticks start shooting up and going crazy. Okay, that's what we want to see. So if we go back here, we see, let me zoom in so you guys can see it. One second. Boom, boom, boom. So if we come right here, everybody, you guys see this is where the last demand zone is showing on here. Now, personally, I see one more demand zone, but I'll break that down. But it was broken, so that's probably why it's not showing. But right here, you see we have consolidation, comes down here, and then boom, the big push up happens and it goes crazy, right? That makes this a demand zone. Now, if we come over here, ever since this push up right here, we have to see where do we see this push up happen and we break structure or change character, right? We break through this consolidation, we push up, we broke through the consolidation, that forms a demand zone right here on the 4 hour time frame. But if we keep going up, where do we see anywhere else that we have consolidation and we break through a previous high? We haven't established it yet. For example, right here, we pushed down, came down here, nice look small, a couple days of consolidation, push up, but boom, we stopped right here. The previous high was right here. Okay, so boom, that can't be one. We pushed down right here, got some consolidation, consolidation, consolidation. Boom, strong green candlestick to push back up, but then it stops right here. It doesn't break this previous high over here. So therefore, that's not a demand zone. And then boom, we fall down here, get some small consolidation. We push up, push up, push up, push up. As soon as we break this high right here, everybody, we will start to call this will be our closest demand zone. Why is that? Because we fell down here, boom, boom, boom. Buyers bought in, going up, going up, going up, going up, going up. Breaks the previous high right here, forms a new one, breaks structure, change of character. And that's going to form this level right here, this whole red candlestick as a demand zone from that 350 range down to 340, like a 343 range on the 4-hour time frame. Does that make sense?
Yeah, makes sense.
Okay, don't worry about it. We're gonna keep going over. We're definitely gonna keep going over it, okay? No worries. Edward, I see your hand is raised. Go ahead.
Yes, sir. You just touched it. I was just about to ask you, would that 345 area be a demand zone? But you just answered the question.
My man, yes, sir. And you see why though, right? But it has to break. It has to break this area right here first. Okay.
Right.
Has to break that area first.
Tracking.
All right. Good stuff. Good stuff. Good stuff.
So a quick little market structure question for you then.
Mm-hmm.
Is it safe to say anytime we establish a new supply or a new demand, that becomes a change of character then?
Say it. Hold on one second for me.
Sure.
All right. Sorry. Say it one more time, Ryan.
So anytime we establish a new supply or demand zone, would that always be classified as a change of character then?
Not necessarily, right? Not necessarily. So it's not gonna be a always type of thing. And when we get, and I don't want to get too deep into market structure right now because it definitely throw a lot of people off. But when we get into market structure, you start identifying, okay, where we have a change of character, where do we have a breaker structure, and those things, and how to identify them as well. Okay, but yeah, to answer your question, not every single time. Okay, but now let me show it to you from the opposite way, right? With the supply zones. So look right here. This supply zone was created. Okay, so when we had this supply zone created, what happened? We had consolidation, consolidation. Boom, we fell down here, right? Fell down here, and we made a new low. This level right here was created as a supply zone. Okay, created supply zone. Then we pushed back up, came back to the supply zone, right? And then next thing you know, we had consolidation, consolidation. Boom, fell back down again. Look what we did. We broke this particular low right here and formed this low, and therefore that made this area a what? Supply zone. Okay? Made a supply zone. Potentially, I would have possibly made mine right here if I was drawing it myself. But hey, like you say, it's a couple pennies, couple cents. Okay? Supply zone. Then we pushed back up, came to this level right here, stopped, and started to push back down, and boom. Once we broke this level right here, what did it make? It made a new low. And what did this form? A new supply zone. Okay? New supply zone. Okay? And like I say, the reason why we keep doing that and going over that, because what do I want you guys to do? I want you guys to look at a stock and be able to identify the supply and demand zones, and now you will know what zones and what areas you're actually trading in. Okay? Y'all with me? Y'all good? All right. Let's keep going. Let's keep going. Okay. So now we got QQQ, we got SPY. All right. Now let's go back to SPY. I thought I had my thing up. All right. So let's go back. Let's go back and look at these pivots. Okay. Let's go back. Take a look at some pivots. Okay. I thought I had my. Oh, I do have it up. It's behind me. I'm like, why can't I see my traded my thing? There we Okay. Woo, woo. Look at this, everybody. We breaking through. We breaking through the top of the supply zone. We breaking through the top of the supply zone. Take a look at it, everybody. Right here, we're breaking through. We already know this is a supply zone for us. Let me extend this back out. Boom. Take a look, everybody. We're breaking through these supply zone. This supply zone. I know it's kind of hard to see because I made this gray, but yeah, we're trying to break through. Okay, so now, everybody, let's break down. So we know we can do our pivots, right? We're going to do our pivots in a moment, okay? But from what we've been learning so far, I'm not going to do the pivots quite yet. I want you guys to see something right quick. Remove all these levels. Remove price level. Remove draw. Why do I keep doing that? I don't want to have to redraw everything. That's why I'm doing it one at a time. Okay? So, from what we've been learning so far, when we had class on Monday and last week as well. So, what's something we're looking for? So we know we can do our pivots, right? What's wrong? Okay, we know we can do our pivots. I don't know what's going on, but I think we're good. Okay, so we know we can do our pivots, and we know we can actually. Oh, you guys can't see my screen, can you? There we go. So we know we can do our pivots, but I don't want to do the pivots right now, right? I want you guys to tell me something. After we find that supply and demand zones, the supply and demand zones for the day and what we're looking at, now we drill down some and we start looking at, start finding some levels, some intraday levels for our day trading, right? What's one of the first levels we look for, everybody? So instead of using the pivots, what's something else we can...
Previous day high and low.
Say it again.
Previous day high and low.
Good stuff. Previous day high and low. So let's identify our previous day high and our previous day low. Right here, the previous day was on Tuesday, so the previous day high is right here. Boom. Previous day high. Our previous day low is right down here. Boom. What does that previous day high and previous day low tell us? It tells us that, listen, this area that I have identified right here, the buyers could not push above this level yesterday, and the sellers could not push below this level yesterday. Okay, so it tells me the buyers was right here chilling yesterday, and the sellers was right here chilling yesterday. Okay, so once again, the buyers were down here chilling yesterday, and up here the sellers was chilling. I always use this example about the winos in front of the liquor store. Growing up, you used to always see the winos in front of the liquor store or front of the convenience store. They would be there faithfully every morning, every night. They were there at the liquor store or the convenience store, sitting there chilling, right? So that's what that represents, okay? Now, after we identified that previous day high and previous day low, what's something else we can identify? What's the next?
Pre-market high and low.
There you go. Pre-market high and low. Why do we want to identify the pre-market high and low? Okay, we identified the previous day high and low. Now let's identify the pre-market high and low. The reason why we're doing it, because we want to see, since the market's been open this morning, where has everyone been hanging out at? Where have the buyers been? Where have the sellers been? So boom, we come right here. We see the pre-market low is right here. Boom. And the pre-market high is basically that previous day high. So we can leave that alone. Okay? So if we drill down to this 15-minute time frame, right now, without using any pivot points, we understand that we have a previous day, a pre-market high, pre-market low right here, pre-market high. We're inside of a box, everybody. We have put the stock market right back inside of a box. Remember, I love putting everything inside of a box. Okay? And then we have our previous day low right here. Right now, that previous day low is not in play right now because we're at 438. This previous day low is at 434. And what does this establish and what does it tell us about the trend, everybody? When we can see our previous day low, previous day high, pre-market high and pre-market low, what does that tell us about our trend? It tells us that we're trending up right now because we didn't break below our previous day low, and we're still above. We're above the previous day low, and right now we made a pre-market higher than our previous day low. So therefore, what does that mean? That means we're currently trending up until we break our pre-market low. Once we break our pre-market low, now we're starting to do an intraday what? An intraday.
Oh, intraday support and resistance.
Intraday support resistance, and we break that level, it becomes an intraday downward trend as well. Okay? I know that sounds like a lot, everybody, but trust me, when you the reason we're going to keep going over this so many times, the more times you look at it, the more times you do it, you see. You remember in the mastermind, like everybody's in the mastermind saying, Chris, how you just look at the stock and you just see all these things? Because I've done it so many times. Okay? Because I've done it so many times. Trading is not about just making money, losing money, whatever, right? Trading is simply about, can you understand what's going on? So that, and the only way you learn how to see what's going on is by doing reps. Repetition. That's it. Okay? Edward B., go ahead with your question, brother.
So, sir, do we need to do support and resistance lines?
Do we need, so give me an understanding. So when you say do we need to do support resistance line, you mean the 3-year 1 week, 1 year 1 day?
No, sir. Do we have to put our support and resistance lines on the chart here? Because right now you didn't even put them on there at all. We just used previous days, high and lows, pre-market high and lows.
Mm-hmm.
Do we need to do support and resistance as well?
So let me ask you. I'm asking you a question. The previous day high and the previous day low, what are they?
I mean, they're support and resistance.
Mm-hmm. Now let's do this. Watch this. You see the. Go ahead. No, go ahead. Finish.
I think he may be asking about pivots.
You talking about
Is that right?
No, I'm asking about support and resistance.
I think I know where he's going. I know where he's going. So where you're going is you're saying, okay, Chris, you came here and you right now you just hit the pre-market previous day high, previous day low, right? And then you said, but Chris, we didn't do the 3-year 1 week, 1 year 1 day, 184 hours of support and resistance, right?
Correct.
So let's do this. You see the levels that we currently have right now, right? On here. What I'm going to do is I'm going to go back to the 1 year 1 day time frame right quick. And I want to see the levels that we have drawn right now. Are those levels going to reflect support and resistance levels on the 1 year 1 day time frame? You follow me?
Yes, sir.
Okay, let's see. All right, so the last time we was at this level right here, it was right here. So let's focus on this part, this area first. All right, so if we come back here all the way to, this is June 13th of 2023. This level right here, this is the previous day low. This is the previous day low from November the 8th, November 7th, 2023. We went back 5 months to June and look at this level. Previous day low, is it shown as a support level?
Yes, sir.
Right here, is this shown as a support level? Is this shown as a support?
Yes.
Support. Now right here, is it resistance? Resistance. Is this resistance? Resistance. Right here, support. Okay. Now let's move up to this one right here. This is the pre-market. This is the pre-market low. Okay, this is the pre-market low right here. Let's take a look at it. Look right here. Is this showing as support? Yep. Showing as resistance? Yep. Mm-hmm. Resistance, support. Okay. Now let's go to the previous day high. Right here, previous day high. Resistance, support. And that's just from June and July. Let's keep sliding over and see the next time we come down to these levels. The next time we come back to these levels, the middle one shows us support. Come down, support, support. It broke through right here. Support. Let's keep going. Right here, broke all the way down, but this came as resistance. Come right here. It broke all the way through. This was resistance. The body stopped right here for resistance. Okay, or support there. Right here, resistance. Let's keep going. Right here, this level is resistance. Resistance. This is resistance. Resist. What I'm showing you is this. The levels. So I want to ask this question. What did I just show you? What did I just break down to you just now?
Basically, the support and resistance.
Exactly. Support and resistance is support and resistance forever, at all times, regardless. So instead of us say, okay, well, let's go back and do the 3 year, 1 day, 3 year, 1 week, XYZ, it's good to do that for the time. It's good to do that. But what we would have identified is the same levels we drew for pre-market. I mean, and it's not going to be 100% every single time to the T, right? But previous day high, previous day low, it's going to be around that same vicinity of if I go back 6 months or I go back a year. Because what we look at with the stock market is based off of something important. What is it based off of? It's based off of historical data. These pre-market levels and previous day low and previous day high, they're not just previous day highs and previous day lows and pre-market highs and pre-market lows for no reason. Those levels are there because based upon historical data, these are the levels where the buyers and the sellers once were. So in the future, the buyers and the sellers are going to go back to a familiar place that they once were at. Now, that's the best reason why to go back for that 1 week, 1 year. What is it? The 1 week time frame, the 1 year time frame, the 4 hour time frame. So you can already have these levels established, right? You can already have them established. Okay? So when that pre-market activity comes, you can say, oh, I already got my levels established. I don't have to draw the pre-market activity because I already have these levels established. But if you don't have them established and you're just doing some intraday trading, yeah, you can just use previous day high, previous day low. Hopefully that makes sense to you.
Tracking.
Okay, perfect.
No, I did.
Perfect. Okay, so now we have these levels set. Okay, we have those levels set right there. All right, and I'm going to tell you something very interesting to watch right now. We came to that top of the supply zone. Everybody, what did I say my play would be at the top of the supply zone yesterday or Monday? Or was it yesterday? I don't know which day. I think it was Monday. What did I say my play would be? My put play would be. Anybody tell me they remember?
To the bottom of the supply zone?
But break down the play. Where would I have entered it? I said my play is where? Think about our A, B, and C entry points out of a supply zone.
You're an A putter.
I'm an A player. So if I'm an A player at the top of the supply zone, I would have entered where for a put at the top of the supply zone, right here, correct? So remember on Monday I said my entry point, I would not enter calls until we break the 438, and I said I would enter into puts when it gets to 438, and I will have a tight stop loss. Why did I say I would do that, everybody? Because it's a high probability setup. So if I would have went with my play, I would have gotten in at this 438 area, right? Got into 438 area, and then it rejected like I would want it to do, and then it fell all the way down here to 436. That would have been like $1,500 to me the way that I trade, and boom, I'm done for the day. Now, I would have waited 1 day, 2 days, 2 full days just to take this play, this high probability setup. And did the high probability setup, would that play have paid off for me?
Yeah.
Because I would have made $1,500. But I waited 2 days for the play to happen. Because on Monday, I told everybody, I said, listen, I would not take any play in this supply zone until it go to 438. So therefore, I'm not trading. I wouldn't be trading. right? For a put play. Okay? Patience. We're going to learn patience, okay? Patience is very, very, very important when it comes to trading. I would take $1,500 to pay my mortgage payment in one day in less than 30 minutes for being patient for 2 days. Okay? All right. Good stuff, everybody. One second. How y'all feeling? How y'all trade? And everybody listen, make sure this, I want you guys to make sure of something. There's no such thing. One second. I want you guys to make sure of this. I want you guys to understand this. There's no such thing as a wrong question, bad question, whatever. Make sure you ask these questions. I can answer these questions in minutes for you. If you go searching on your own, it's going to take longer. Okay? So make sure you ask those questions. Okay? Ask questions. All right? So, next thing, let's keep going. So right now, everybody, we can make our pivot points, but we don't have to make our pivot points right now. Okay? The reason why we don't have to do our pivot points is because we already have our levels. We already have zones right now. So we don't have to do any type of pivot points right now. Okay? Now you can go ahead and draw them and have everything set up, but I personally just kind of do mine, as it presents itself. Until we break above this level right here, this resistance level right here, previous day high, there's no point in me making the pivots because my pivot's gonna go up here, and that's when I want to know once we break this level, that's when I will say, okay, I'll be worried about what's going on up here. Okay?
Chris, question.
Yes, ma'am.
When it gets to the previous day high,
Okay.
is that decision making time? Is that when you would enter, or what do you do at that point?
Yep. So and we're gonna get into it. We're gonna get into like when to enter, like when to enter, when to exit, all that stuff. Very, very soon. But let me ask you this question. So right now, I want you to look at the whole totality of everything. This gray area on my screen right here. What does this gray area on my screen represents right here?
Supply zone.
A supply zone. Good stuff. Right? Okay. Now, so you understand we have the supply zone. Let's piece it all together. We have the supply zone. Okay. The way that I trade, right? So let me ask you this question first. When you say enter, or what do you mean by enter? Enter into a what position? A call or put? Which way are you talking?
Which way, if I entered, which way would I go?
Yes.
That's my question to you, because I don't know if it goes through the 438.
Mm-hmm.
What do you do? Do you follow the trend?
Got you.
Wait for it to retest? I don't
Bingo. Bingo. There you go. So your question is, okay, Chris, once we break through the levels that we have identified, what's next, right? So we know we have this 438 right here is the top of our supply zone. Okay? The top of our supply zone. So what we're looking for when we break above the top of the supply zone, we want we break above the supply zone, boom, we break out the supply zone. What we want to see is we want the market to come back here and retest this level, because that's our resistance force, right? So right now, if you're in your home right now and you shoot a bowling ball through the top of your ceiling, right? What does it leave in the middle of your ceiling? Okay, right. It leaves a hole right there in the middle of your ceiling. Now, if you go and roll that bowling ball and it falls through that hole, where is it going back down to?
Support the floor.
To the floor, exactly. So what you want to do is when we're retesting, when we push up like this and we come back and retest, what we're retesting is we're retesting to make sure that you and your husband called the repair person to come to repair that hole in your ceiling. If the person repaired that hole in your ceiling, what we're going to do is now we're going to enter into our trade for particular calls to go up, because now that hole in our ceiling is patched up, so that bowling ball cannot get back through that hole unless somebody drops it down again. But in order for somebody to drop the bowling ball down, the bowling ball first has to be what? Up. Make sense? Let's go through that analogy again. Let's go through that analogy one more time to make sure you understand it. Okay? When we break through the ceiling, that 438 represents the ceiling. That's the top of that supply zone. It breaks through that ceiling. Boom, we break through that 438. Now the 438 has a big hole right there. Now your ceiling in your house has a big hole right there. When it comes back and retest, if that hole is still there and the repairman didn't come and patch it back up, it's going to fall back through. Okay? But if the repairman came back and caught and repaired it, it's going to come here, bounce off of it. And if I throw a tennis ball off of that, it's going to bounce up. Right? It's going to bounce up. So we want to get into that play on the ride up. Okay? Now, when it goes up, we get into that play, we make some money, XYZ. If it comes back down to this level, it has the potential to break again if the bowling ball or whatever ball it is, the cannonball, has enough velocity and the selling pressure is heavy. Does that make sense?
Yes.
Okay, sweet. Good stuff, good stuff. Now, as we continue to go on, remember, I'm taking you guys through this, baby steps at a time. I want you guys to be able to identify first. We are going to see other things that's going to tell us, okay, if we're pushing up or if we're pushing down. For example, right here, right now, the 1 hour time frame. As long as this candlestick is above this 9 EMA, we're pushing up. Hold on one second, everybody. Oh, all right, everybody. So my baby just woke up. So what I'm gonna do is this. I'm going to jump off of the live stream on YouTube, and everybody that's on my Zoom. I'm about to go into my house right quick. So guys, you stay right there. Give me a second, then I'll be right back with y'all. Okay? So I'm gonna put y'all stay. So everybody on Zoom, stay on Zoom. Everybody on YouTube, I'll see you guys next time. Y'all have a good one. This was just a quick preview, a snippet of what we actually do in our. 1 second. So this is a quick snippet of what we actually do in our trading course and all that stuff. All right. So anyway, listen, y'all have a good one. Let me go take care of this baby and also teach this class at the same time. All right. Y'all have a good one.